सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this episode of Macrosutra. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint, and this time we're going to look at something really important, which is whether the government is maintaining its discipline on its finances in the run-up to the elections. Now, one would think that, when the elections are coming up, that the government would suddenly throw all caution to the wind and spend lots of money in trying to buy votes. But so far, the data shows that there's been quite a lot of discipline. But the latest data shows that this might be wavering. And with us, we have Radhika Pandey, Associate Professor at NIPFP, who has analyzed all of the data and is going to point out some of the interesting trends in it. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
So now, Radhika, overall, does the government look on track to meet the targets that it had set for itself at the start of the year? We can go into the details in a bit,
Right.
but overall, is it on track?
Yeah, so overall, if we see the government is on track, because if we look at the first half, so these are the two milestones. We look at the first half, then we look at the overall year. But if we look at the first half, that is April to September, the government's finances look broadly on track.
Okay.
There are some shortfalls in some categories, but they are more than offset by some other categories. But overall, if we see the overall objective of the government has been to maintain fiscal deficit at 5.9% of GDP in this financial year. And if we look at the first half of the data, we find that some of those, it's broadly on track, because one good thing is that it had kept its revenue expenditure growth at a very modest 1.4%, whereas capital expenditure has increased. And if we see for the first half of the year, everything was broadly proportionate. So there are, we expect that around 50% would have been spent on capital expenditure. That has happened. So things look broadly okay if we compare the first 6 months. But what needs to be seen, it's still broadly on track, but what needs to be seen is that with some emerging challenges, with some possible strain on finances and some additional sources of spending that the government might have to incur, with whether the government will still be able to stick on its path of fiscal consolidation, or there could be minor slippages.
Right. So just to give you a little bit of a background, the data that we have is for the April to October period. So recently the government put before Parliament its supplementary demand for grant, which basically is the government asking permission from Parliament to spend some more money. And now looking into this also tells you the priorities, where it wants to spend more money. Is it subsidies? Is it more capex? So we're going to look into that as well. So now looking at the expenditure side first, has the government's expenditure gone off track, or is it largely on track? And can this be linked to the upcoming elections?
Yeah, so more interesting part is the revenue expenditure here, because as I said, government did a very ambitious, proposed an ambitious target of 1.4% growth in revenue expenditure for this financial year, considering that this is the last year before the full-fledged general elections. This was an ambitious target, only 1.4% increase in revenue expenditure. We know that revenue expenditure includes components like food subsidy, fertilizer subsidy, salaries, pensions, and these are very important constituents of expenditure, particularly during an election year or when election is fast approaching. So, but even considering all of that, the revenue expenditure was pegged at 1.4% growth. The growth over the revenue expenditure of last year was targeted at 1.4% for this financial year. But if we look at the first 7 months, so as you rightly pointed out, now we have the data from April to October. This is released by the Controller General of Accounts. The data tells us how much of the out of the budgeted target, how much has been raised raised in terms of taxes, how much has been spent in terms of expenditure.
Right.
So there, what we see is that for the last 7 months, the revenue expenditure growth has been 6.5%.
Oops.
So that is a cause of concern, because now if your target is 1.4% and if revenue expenditure growth is 6.5% in the first 7 months, that means in the next 5 months you need to do contraction.
You have to slow down.
You
quite
have
a bit.
to slow down quite a bit, and the growth in revenue expenditure has to turn negative in order to stick to the 1.4% growth in revenue expenditure that was fixed at the time of the budget announcement.
And with the elections coming up, this seems like a
Very
challenging
unlikely
thing.
possibility, considering that already some fresh sources of expenditures have been announced. We know that the free food grain program has been extended by 5 years. For this financial year, the implication will be only for Jan to March, because till December, the allocation for funds were already made. So, but for January to March, some additional spending would have to be made. That will put pressure. The other thing is on Manrega, because we have seen that the demand for work still remains elevated, and the budget allocation was 60,000 crore. There are estimates that maybe the demand for funds under Manrega, the 100 days guarantee program, would likely be around 1 lakh crore. So government would have to make arrangements for funding that scheme, either through its savings or through fresh demand for grants, fresh sources of asking for funds. That is another. And the third important element is that during the state elections, the government has announced an increase in minimum support price of key rabi crops. Particularly for wheat, the minimum support price has been increased by rupees 150 per quintal. Now, this has both economic and political fallouts, because economically also you need to incentivize farmers to sow wheat, which till now has not picked up. The rabi sowing has not picked up, and given that the first estimates do suggest a dip in production, this was needed. But it also has political implications in terms of increasing expenditure, and that could show up as higher revenue expenditure. So if revenue expenditure increases, then either you need to have a cushion in the form of higher taxes, or you may have to squeeze capital expenditure. If none of them, then your fiscal deficit deviation might happen. You may deviate from your fiscal deficit target.
And apart from this, they've also increased the LPG subsidy and the fertilizer subsidy.
Yes. So for that, already in the demand for grants, they have sought additional 13,000 crore for fertilizer subsidy. So these are all, these are some of the examples that could put pressure on the revenue expenditure, given that the government had proposed a very ambitious growth target of just 1.4%, which is like flat growth.
Right. And so now you mentioned the demand for grants. Let's go into that a little bit. What are some of the additional expenditure that the government plans to make?
Yeah. So just a day before, the government sought additional spending for certain items. So this is the first batch of supplementary demand for grants. It is expected that the government will come up with second batch of supplementary demand for grants in the budget season. So there is the overall gross expenditure, and then there is a net cash outgo. So gross expenditure increase is more than 1 lakh crore, but out of that, the net cash outgo is going to be 58,000 crore, because the rest would be savings from some of the other sources of expenditure. So the net implication that will happen on the fiscal deficit would be 58,000 crore only, which is quite noteworthy, and which is sharply lower than the first batch of supplementary demand for grants, which was sought last year. Because last year it was much higher. Even the net cash outgo was more than 1 lakh crore. So in that way, it's a very welcome development that shows government's commitment to, stick to fiscal prudence. But in terms of some of the important items of expenditure, one is fertilizer subsidy, 13,000 crore, and almost 5,000 crore is for food subsidy because of the extension of the free food grain program. Then there are some other subsidies. There are some other expenditures for the cash handouts that are given to farmers, and also Manrega, but that would be taken care of through additional savings. So these are some of the big items. In addition, there are very small items of expenditure, some new services which were not part of the budget on which they are incurring expenditures.
Right. So just on the expenditure side, just to recap, revenue expenditure has already become more than the government's target. And so that means for the next 5 months, it's going to have to actually reduce it. It has to become negative for the next 5 months if it has to meet its target for the year. A lot of this expenditure seems to be in the form of subsidies, LPG, food, and various other subsidies that the government has promised. It has already gone to Parliament asking for permission to spend more money. It will likely again go to Parliament later in the financial year asking permission to spend more money. But that's on the expenditure side. Now, on the revenue side, are there any challenges that you're seeing from the data that the government is likely to face on the revenue side?
Yes, so there are challenges on the revenue front also. One big set of challenge is on the tax revenues, and then the other set of challenge is on the disinvestment receipts.
Right.
Okay, so on tax revenues till now, if we look at the first 6 months of data, tax revenues were quite buoyant and the growth was quite encouraging. But what has happened in October is that most of the key taxes have reported a contraction as compared to October of last year. Okay. Just if we look at October month, so there are two ways. One, we look at April to October growth over April to October of last year. And we look at just the October tax revenues, various tax revenues like corporation tax, income tax, excise duties, custom duties, and most of these taxes, except for income taxes as well as GST, most of the other taxes have reported a contraction. For instance, corporation tax has reported a contraction of 13%. That means in October of 2023, the net collection, the gross collection of corporation tax is 13% lower than October of 2022. Okay. Now, these are some challenging points about the tax parts particularly, given that corporations are having extraordinary profits. So what explains the decline in corporation taxes? That is a challenge which people need to, which policymakers may be grappling with. That's what's causing this volatility. In between also in one of the previous months of the financial year also we saw a decline in corporation taxes in terms of the rate of growth.
And then we had discussed that it might be because profits are coming from the sectors that don't actually pay that much tax, and the tax paying industries, those aren't actually doing that well.
And that we discussed during the first quarter.
Right.
But if we look at the second quarter, we have seen that profits have been quite encouraging, led by decline in commodity prices.
Yes.
We've talked about manufacturing sector revival in the GDP data. So under these circumstances, the decline in corporation tax is something that needs to be watched out for. Maybe it's just a 1 month blip, and maybe it will increase in the coming months. Maybe it's a seasonality issue. There could be various issues, but the data shows that corporation tax has reported a contraction in this the month of October. Similarly is the case with customs duty. Also, they have reported it has almost turned half of the growth rate is 50% decline as compared to October of last year.
But that stands to reason. Our trade has also been falling. Both exports and imports have been coming down. Customs duty would come down.
Yes. So, but they all have implication for our fiscal math. Okay.
Yes.
So, and because of this October trend, overall April to October growth rate has been lower this year as compared to April to October growth in tax revenues of last year because of October. Also, as a percentage of budget estimates, what the government had raised in the last year, it's been lower this year. That how much it raised in the month of April to October as a proportion of the budget estimate is lower this year as compared to last year. And barring income tax, that is true for most of the other taxes.
Which puts pressure on the next few months.
Exactly. So that is on the tax side. On the disinvestment side, we know that government had already scaled down its budgeted target. Last year, the target was 61,000 crore. This time it was scaled down to 51,000 crore. But till now, the disinvestment collections have been just 8,000 crore. So that means that government would have to, in its revised estimates that will come out along with the vote on account, we could see that there's a substantial scaling down of the disinvestment receipts.
Right.
Maybe it could fall to half, from 51,000 crore to 25,000 crore, because most of the significant disinvestment plans have not fallen through. We have seen Hindustan Zinc was one of the important disinvestment plan. IDBI was one of the important disinvestment.
Right.
So these are not likely to materialize this year, which will again put pressure on the receipts front. Encouraging thing is that the non-tax revenue have been very good, because government has received dividends from RBI and state-owned commercial bank.
So non-tax revenue, but not counting disinvestments. The non-disinvestments, non-tax revenue.
Yeah. So disinvestment is the non-debt creating capital receipts.
Right.
So this is non-tax revenue, which is part of your revenue
I see.
receipts. So
I understand.
overall receipts include revenue receipts and capital receipts.
Right.
In capital receipt, we talk about non-debt creating capital receipt, which is disinvestment, and also asset monetization. And both of them have not picked up this year. For asset monetization, the government had pegged a target of 10,000 crore and nothing has happened.
Yeah,
zero. So it's zero. So these are some of the challenges. But encouraging thing, as I said, is that is more than offset by non-tax revenues this year. But this will not be the case every year, because this time the RBI gave a dividend which was much higher than the previous year. So maybe there are a lot of things that go into the collection of non-tax revenue. But overall, one challenge or something that needs to be washed out is the collection of taxes in the coming months, and the second thing is what will happen to disinvestment receipts. So those are the two challenges on the revenue front.
Right. And now all of this, the fact that the government's going to have to cut down on revenue expenditure, tax revenue is not doing that well. Does this have implications for the government's capital expenditure plans? Because it's been talking a lot about how capital expenditure is what is driving growth in the economy.
Yes.
And it's been going strong on capital expenditure.
It's been going very strong on capital expenditure. Both central and state governments have been doing strong till now on capital expenditure, despite this being the election season. And another small challenge that could emerge is on account of the nominal GDP growth.
Right.
Yeah, because all the targets, fiscal deficit to GDP, tax to GDP, they are all benchmarked to GDP growth. Right.
Of course.
And in the budget, the GDP growth was fixed at, the nominal GDP growth was estimated at 10.5%. But what we see in the first half is that the nominal GDP growth has been only 8.6%.
Right.
So that means that nominal GDP growth would also have to pick up to provide that cushion to attain the fiscal deficit target of 5.9%. Because if your nominal GDP growth comes lower than what was targeted in the budget, then your numerator, that is the absolute level of fiscal deficit, would also have to fall to achieve the 5.9% deficit target. So that is something that needs to be seen, because in the first half, nominal GDP growth has been lower. And given that commodity prices are declining, wholesale price index based inflation has been in the deflation zone for the last 7 months, it looks unlikely that nominal GDP growth would suddenly shoot up in the next 5 months to provide the necessary cushion.
You might have a strange situation where the government is actually hoping for some inflation, because that might help it with the nominal GDP growth.
Absolutely. But the good things, it's a very complicated thing where on the one side, the positive thing is that commodity prices are falling. So it's giving a boost to your real GDP.
Right.
But it's creating problem for your nominal GDP. So, but all the fiscal indicators, your tax collection, they are all benchmarked to nominal GDP. And if that, and last year, last year, the nominal GDP growth came higher. So it provided that cushion to fiscal deficit. This time, that cushion may not be provided. Again, to be fair, the deviation due to this could be very small. But whatever we are discussing, cumulatively, if all of them materialize, they could have a perceptible impact on the fiscal deficit.
So we were talking about capital expenditure also.
Yes, capital expenditure. If revenue expenditures are not curtailed, and if government decides to stick to its fiscal deficit target, then maybe there could be an expenditure compression in the form of capital expenditure. So that is something that needs to be seen. What happens in the second half of this year, particularly the next 5 months, will be very crucial to determine whether the priority on capex still remains, or the government is willing to slightly deviate from its target, but its momentum on capex will remain. So those are the complex policy challenges that the government would have to face in the coming months.
Right, because if it slows down on capex, then maybe growth in the next few quarters will slow
down. Yes, because we've seen that gross fixed capital formation has remained high, buoyant. We've seen there was an 11% growth in July-September quarter, and private investment, though there are signs, we've seen that capacity utilization has picked up, but still some kind of support has to be provided through government capex, and if it comes down, it will definitely have implications for growth. So under this situation, if tax revenues pick up, so this October decline is offset by improvement, then we may not see substantial scaling down of capital expenditure. So there are various possibilities whether tax revenues are able to provide the necessary cushion in the event of revenue expenditure surpassing its target.
Right. And now we have a question from Sankalp, which has to do with the government's capital expenditure and infrastructure push. He says that now should the Modi government take a step back from excessive infrastructure spending and instead encourage more private borrowing?
Private borrowing we are seeing that this happening. If you look at the bank credit growth, the retail loans are already high, and therefore RBI has put a curb on it by increasing the risk weights.
Maybe he means the private sector, borrowing and investing.
But that is something that government by itself cannot encourage. The government can only do certain things like increasing capital expenditure and helping in crowding in private sector investment, and providing a conducive environment for investment. But what we've seen, there was a statement by the CII president. He said that, it takes time for private investment to again start showing a continuous uptick, because there have been so many periods of uncertainty, starting from COVID, then Russia-Ukraine war, then commodity prices flaring up, and then again another conflict in the Middle East. So it takes time for private investment to see a significant pickup, a sustained pickup. But there are already green shoots of recovery in private investment in terms of the capacity utilization, which has increased in some of the industries, and that has to do with private investment, because if private investment would not increase, capacity utilization will not increase. So government on its side can only provide the necessary environment and increase government capex to crowd in private investment. But what needs to be seen is, going forward, will the government in the next year's budget, what is its target for capital expenditure? Will it continue doing the same push in the next year also or not? Because we've heard chief economic advisors saying that maybe next year the same kind of momentum may not be given, and there could be some slowdown because government now needs to back out and private investment needs to be given more space. So that will depend on a host of factors. It will depend on how quickly the policy uncertainty wanes, and what happens to cost of borrowing, what happens to the entire business climate as a whole.
Of course. Right. So there you go. There's a lot happening with government finances. Revenue expenditure has exceeded its target so far, which means that in the next 5 months, the government has to pull back on a lot of its subsidy expenditure and all of that, which seems unlikely with elections coming up. So on the other side, what it needs to do, if it wants to meet its fiscal deficit target, it needs to raise its tax collections. That too seems kind of challenging given the past data so far in this financial year. Tax collections aren't doing that strong, but non-tax revenue seems to be growing quite well. So that might give a little bit of a cushion. But if all of this comes together, if revenue expenditure continues to exceed target, if the government wants to meet its fiscal deficit target, then maybe the capital expenditure, which is what is driving growth right now in the economy, might need to be reduced, which is not great news for the economy. So overall, the next 5 months has a lot of importance for the economy. And with the elections around the corner, all eyes are on the government and how it manages its finances. But on that note, thank you so much for watching.